end of October stats as we head into November 2022. Let's cover the local Sarasota statistics, the national luxury market stats, some trends coming up, and a little bit of predictions in today's video. Stay tuned. All right, so let's start with the local stats. So I took like 6 pages of notes because I like to, when I'm kind of formulating my thoughts on the market, there's so much data out there that I like to sit and digest it, interpret it, take notes. This is what I had to do in college too. It's like take notes, I remember it more, digest it, and I can better explain. So I like to look at the local statistics, then the national luxury market, kind of compare the numbers, and a lot of times they coincide with the Southwest Florida market. Also kind of take a glance at what we have is called Market Quest in our back-end Coldwell Banker dashboard, and like some predictions and advice if I have any at the end. So I'll just dive into the local stats here. So there are, I guess, the bigger picture things. The sales are down quite a bit, depending on if you're looking at single family homes or townhomes. It's in the range of between 30 to 40% decrease, and I'm talking year over year. So it's been noticed by the real estate community. We definitely have felt it. We had a record month in August just for the team. We did just about 10 million in closed transactions in August, and then September was like boom, quiet, and we are in like this weird influx between market right now. We're definitely still a seller's market, inching toward more of a not equilibrium market, but things are definitely changing. So we're starting to see increased inventory, and year over year, the prices are still up, but we're definitely not in the frenzy. Now, there are pocket areas, as we sit here on beautiful Longboat Key here, there are still areas that are selling pretty quickly. If a property is priced well, check out the pricing video we did. It'll still go in 5, 10, 15 days or less, right? So, it's important to be with an agent that really knows that neighborhood to price it just right to get those people in the door, and maybe get multiple offers. We actually just got one of our listings had multiple offers. So October 2022, still multiple offers. Okay, prices leveling off, but still they're leveling off, but they're still like 20% higher year over year for the end of September, right? So historically still high. A lot of the properties that were purchased over the last 2 years have doubled in value. And so what we're seeing is, with inventory still really low and not quite, it's like inching up by the millimeter. Okay, so last month we were at a 2-month inventory. We're only at about a 2.1 month inventory right now. That's not that much of a difference. So that's kind of interesting. And typically after a big event like a hurricane that we had, we actually have like this weird cooling off period, people figuring out what's happening, and then the market just shoots off. But this time, because we have high interest rates, inflation, unemployment is actually okay, but all these variables that are coming into play, that it's kind of a little bit of an unpredictable market, honestly. It's not like a normal situation where we can sort of predict like where things will be. It's kind of in this in-between stage, in my opinion. All things considered, there are areas too that are sort of like the last to feel these dips, these high highs and low lows, like Longboat Key, Siesta Key, Bird Key. These are really desirable areas that lots of affluent come to buy second homes here. So typically they're the last to feel a recession and the first kind of areas to bounce back. Anybody that buys on the water knows that there's a tremendous amount of value on the water. There's long-term upside to anything beautiful like this over the long term. You always want to think long-term, right? In real estate, the last 2 years are kind of like, they're just anomalies, right? So we can't, I always advise people like have a 5-year plan. It's a conservative plan for most people. I know I'm diverting off the topic a little bit. Now we've seen some people also delay closings. There's some of that is impacted by the hurricane. We had one that was maybe going to be delayed because of financing. Turns out it's going to be on track, but some delays, some cancel contracts. That's just par for the course during post-hurricane or acts of God that happen, during the contract. So what else can I tell you? So even though we're at 2.1 months of inventory, that's about 132% increase in inventory from this time last year. Rewind to this time last year where buyers, you had to just run to the property, sight unseen, no contingencies, no inspections in some cases. That's not a healthy market. And so we're trying to get these more inventory. Now, with the rates going up, that's just a side effect, right? Because the Fed wants the demand to slow, and it has, obviously, with the lowering of sales that we've seen. 30 to 40% is huge. What else? So, days to contract. Okay, this is days to contract and percentage of list to sell. So it went from, September last year, 2021, we went from 100% of asking to contract, right? So the sales were 100% of asking price. Now they're at what is way more normal, 95.8% of asking. Okay, so ending in October 2022 here. And then days to contract went from 7 days to 20 days. Okay, and now we're also seeing longer closings, which is very interesting. And not by much. A normal closing is 30 days maybe, and I think it's 45 now or something like that. So not by too much, but it's a difference for sure. And that's pretty much it for my takeaways for the local stats. Okay, now on to the national luxury home market update. So what they're seeing is a return to more normalcy, and it's certainly not a buyer's market. It didn't turn overnight, although it might feel like that in some areas, right? So normally we see an increase in inventory come the fall, and it would be more than from a 2 to 2.1 month inventory for our area specifically. So it's not as dramatic as we have seen historically. And the demand is still for move-in ready, turnkey furnished. The turnkey furnished thing is great because we've seen a lot here in our market just over my 20 years here, particularly island side, on the Keys. It's a convenience. People like to walk in and just have things ready and start to have that usage right away or rent it right away. So that's huge in demand still. The affluent are tending to prioritize their locations, right? They want to spend more time with family. If you think about it, like during the pandemic, some people didn't even see their grandparents pass away. They couldn't go to funerals. So there's been a shift in the mindsets too of people nationwide, particularly the affluent, that if they have a choice, they're going to spend more time with family and centered around those activities. Being able to be outside all year, like in Southwest Florida, and being able to go to the beaches. And another thing that I read too, which has been big here also, is the walkability. People want to just be outside, walk to different amenities like restaurants and that sort of thing. Where is the market headed? That's always the $1 million question. If I had that crystal ball, you know what I mean? I don't know if I'd be standing right here. It's, again, I feel like the consistency is there's this unpredictable influx of what is to come. So we don't really know because of all these strange variables that are coming into play, as I mentioned, with the rates and all that stuff. But we are seeing a trend toward a more balanced market for sure, which has been needed for some time. So it's not all doom and gloom. Let's see. So yes, lack of inventory coupled with homes staying on the market longer. This is not a bad thing. We're giving buyers more opportunity across the country to digest what they saw, make an offer, negotiate like it should be in a normal real estate market. Another trend that we should expect to see are the people that bought over the last 2 years have locked in some incredibly historically low interest rates, right? So those people that bought are going to be far less inclined to sell. I think I may have mentioned this on the last video, but it still stands to be true unless there's some sort of big life or lifestyle or family event that occurs that makes them really need to move closer to family. Maybe there's a death. Lots of times we see estate sales that kind of force people to move, divorce, all that kind of stuff. But I don't think it's realistic to expect the same prices and the same speed of the increase of prices over the next couple months, quarters, and the next year. I think in our area, what I'm seeing or thinking will be coming down the pike because of Hurricane Ian, our entire state, and I think it'll trickle into other parts of the country as well, that because this hurricane was like the most expensive on record, we're going to be greatly impacted by insurance. So because of that, the cost of owning properties here is going to go up. So the fact is that prices aren't going to really go down, I don't think. They might stabilize, as we've been starting to see, but to go down and decrease some crazy two-digit, percentages, I think is very, very unrealistic. So just the cost of living in paradise, right? So I think that that's going to be something to expect. So will we see a buyer's market? Again, just they're saying it's going to be hard to predict with all these interesting variables. There's a lot of speculation. I think it's my advice would be careful who you listen to. There's plenty of negativity in the news, right? If you just listen to the news, I'd say try to stay positive and surround yourself with people that are like-minded and not doom and gloom. There's a time and a place to always buy and sell real estate. And, the sun, for us, the sun's shining. I think I read 230 out of the 365 days out of the year. So what better place to own real estate? So still a housing shortage in the luxury market as well. And I think when they say luxury, that depends on where you are in a certain area, at what price point, how upgraded. So I think there's shortages on that really move-in ready, turnkey. Those properties go here really quickly here as well. So that's kind of par for the course for island life, especially downtown luxury. Our downtown luxury market has boomed over the last 2 years. So that's another hot area, especially because you get that walkability factor. If you can't be on the beach, but you can be walkable to all those amenities, that's another great area to consider. On to MarketQuest stats next. Okay, so we have this really great program in our back end for Coldwell Banker. It's called MarketQuest. So we can go in and type in a zip code, or say we want single family homes in this zip code, or townhomes in that zip code or county or whatever. And we can see where the market's changed, how it's shifted. So it gives us a really nice graphic that we can share on social media and talk to you about it here in videos like this. And what it said was September 2022, right? was the lowest number of sales compared to 2021 or 2020. And then we heard something on the news, I forget which outlet, but the lowest number of sales in the last 10 years. So I haven't gone back to look at those stats specifically. That's just something we heard in the news. But we know that it's been slow. September has been really strange. October, and it's kind of bled into October here. So that's been really intriguing. And days on market are up to 31 days, which is far more normal, you guys. We've stuck with a 6-month listing agreement. So when we go to list a property, that's very standard, and especially for like a Coldwell Banker corporate company like that. And during the frenzy, shall we say, we did take a couple of 90-day. I think that was the quickest listing that we took, but we knew that we would sell it, and of course we did. But 6 months is kind of a normal market, and that's what an equilibrium market is. So 31 days is not that long. I think we got really, really spoiled on the seller side for a while. So that's up 19% from August, just the month prior, not even year over year, 19% from the month prior. So that's a big swing in just 30 days. So what else do we have here? Oh, the other thing I thought was interesting was So our price per square foot has gone up year over year, which kind of makes sense. On average, in September 2021, it was 208 a square foot. And fast forward to this year, 2022, we're at 244. So from 208 to 244. And, you know, what are my predictions? What are my final thoughts on all of these things? I think, like I had mentioned, the prices, are they going to go down? I'm not really seeing that here in Southwest Florida. The cost, again, like I've already said, the cost of owning is up. So that's reflective from the insurance and the taxes. So when you pay more for the property, the taxes get reassessed to the new value. That's always been the case. And if it's not your homestead property, it goes up with the market no more than 10% per year. If you homestead, that's another topic, but you can file your homestead exemption if it's your primary residence, and your taxes won't go up more than 3% per year, plus you get another $50,000 exemption off of the taxable value. But regardless, taxes have gone up if you've paid those premiums over the last 2 years. Of course, we've already talked about insurance. So with all of that being said, you know, to have prices go down, I don't feel like that's going to be what's happening. I think they'll just go up less exponentially. So you can correct me if I'm wrong when we fast forward and we look back to this video in a year. Okay, you can call me out. So the second home and vacation home markets, I feel like, are far less impacted. So an interesting statistic I saw in the luxury report was that anyone who has a net worth of $5 million or more, 95% of them have second homes or second properties that they go to and maybe may or may not rent. So actually, and another thing I read too, which makes sense, is that the affluent, typically in uncertain times, with the decreasing of the US dollar's value, I mean, if you left that same money in the bank a year from now, it would have less value. So people that understand that, they want to put their money in real estate, and it's an asset that you can use, you can rent, you can offset on your taxes, and you can get that rental income in between if you want. Use it, create memories, and come down to Florida and create those memories that you've wanted to. And maybe you're headed into retirement and you don't want to wait any longer. We see a lot of that here in Sarasota and Longboat Key. So that makes sense to me. And they want to have a more balanced life. They have a vacation home, and if they can afford it, that's what they're doing. So another cool thing was many of the top cities that people are buying vacation homes, of course, several are in Florida. Others were like Nashville and Charleston, those what we call halfback states that people come to and they can enjoy the fall there, right? And then they have their third home here on the beach. So we're here for it. And I think I've said enough. I think this was hopefully informative. And, you know, we are here as your representative, and I will be the first to tell you it's not time to sell or it's not time to buy. Everybody's different on their timing and their life situations, family situations. There's always going to be people buying and selling real estate here in beautiful, sunny Southwest Florida, specifically Sarasota, #1 beaches, and I can go on and on. So thank you for watching. Thank you for sharing, subscribing. I hope that you found this helpful and entertaining. I try to make it relatable to everybody. And by the way, I live off of referrals. So if I never want you to think that I just do luxury. I love luxury, but I don't. We listed a $199,000 property, and we're happy to say it's under contract in 3 days. I'm here for it, and I never want you to feel like your property is not the price tag that we want. Please call us. We don't care. But thank you for your business, your time, liking, sharing, and commenting. Click the link below, shaylatwit.com.